Good day, ladies and gentlemen, and welcome to the show. Today is Tuesday, the 5th of October, 2021. Thank you for tuning in. Now, here's the thing, guys. Do you remember the movie Dumb and Dumber? Well, you guys got to picture this in your mind, okay? Picture there's a car, and they're in the car, Dumb and Dumber. The two of them are in the car, right? And there's a cliff right there. It's like 1,000 feet down, rocks. It's all down below the bottom of the cliff. And the car is slowly but surely coasting toward the cliff. And the two of them are sitting in the car and they're arguing over gosh knows what. But they're not doing anything to stop the car from going over the cliff. This is the two-party system in the United States right now with the debt ceiling coming due. They got 12 blinking days left to get something done. And they've been told that there's a cliff there. But they're just like Dumb and Dumber. They're like arguing between all these different things that they're arguing over, but they're not getting it done, right? And that's why I said this time might be different. I'm going to tell you what a world we're living in right now. There's so much stuff going on right now, but we're going to take a look at one of the big things that's going on right now. Let's get the chart started right here. Take a look. What we got is the Evergreen problem. And it is got contagion. It has contagion. And part of the contagion is going to swing over to these Swiss banks. It says the hope for growth plans of UBS and Credit Suisse could vanish into thin air because of the Evergreen crisis. The three banks are much more active in Asia than other European competitors. Above all, the prices of these three banks had meanwhile fallen due to the impending bankruptcy of the Chinese group. So there's contagion in banks in the West, because I consider these banks to be banks in the West, Western banks. There might be a lot more contagion. Now, here's the thing about the Evergreen crisis. The Evergreen crisis, we're not going to see the effects of it play out, but in a few more months. It's very similar to what happened in the 2008 crisis, with Lehman Brothers. These things take time to play themselves out. Now, they had 30 days. Evergreen had 30 days to make payments on this loan. They got a 30-day grace period. They missed their payment, but they get a 30-day grace period. That was quite a little while ago. It was quite a few days ago that happened, So that 30 days is counting down, and it must be in the 20s now, or I'm not exactly sure what it is, but it's counting down to that 30-day grace period is counting down. And I don't think that anything's going to get resolved in this situation. I think that the company's going down. It's sinking. Evergreen's still sinking. But it hasn't transferred the real big problems yet into the financial system and large, Let's take a look now at today's silver price. We're looking at $22.52 today. It's down 16 cents on the day so far. It's unbelievable how the price is staying down on silver and gold, when everything else is going up. When oil prices are skyrocketing up higher, and inflation on everything you buy is going up higher. If this continues, there's no reason for companies out there to use nickel plating anymore. If say you got a lock company and got nickel plated locks, heck, use silver. Steel prices will be higher than silver if they keep on with this. Maybe they can start using silver for electrical wires and components, because the copper price is going to go up higher than silver. Maybe they can start making, because silver's a great conductor of electricity. Heck, we've never used it before for wiring houses because copper's cheaper. Well, let the copper price continue to skyrocket. It's going to catch and pass silver. We use silver in our house wiring. You know, I mean, this don't make sense. When you think about that, you suddenly say, well, that don't sound right. You know? Something wrong about that, Glenn. We'll never use silver for wiring our houses. Something wrong with that. Well, I'll tell you what's wrong with it. What's wrong with it is what's wrong with it. They're going to run out of silver, the physical. They can keep this paper price down wherever they want to keep it, as long as they want to keep it there. But the physical supply is going to go into short supply, and it's going to go into short supply pretty darn soon. Think about this, guys. We got all these mines and things out there, and we got this big energy shortage, and they're shutting down everything. You know? Before these things started to happen, you know, labor shortages and everything, this is going to affect the silver mines too, you know? And there's another thing to consider I want to talk about real quick about the silver thing too. The cost of shipping silver. It's heavy as all get out. And I do believe these shipping companies and stuff are charged by the pound or by the kilo. I think they charge by the kilo, how much it weighs. They're not going to ship an elephant across the country for you uh, unless they charge you big bucks. Because they're going to weigh the elephant first, probably. You know, I mean, this is how it works. They work on two categories. Bulk, how much room does it take, in other words, and how much does it weigh? This is what they're interested in, to ship it. And shipping prices are going through the roof. Heck, the way shipping prices are going, for crying out loud, it'll cost more to ship the silver than the silver's worth if they keep the price down like this. Just the shipping prices alone. Okay, let's take a look at the margin here for silver miners, real quick. They haven't got a whole lot of margin between the cost for a whole all-in cost of production to get it into that coin shape, you know, that you guys like to buy, or bar shape. There's all these smelting costs and everything else, and by the time you put in exploration costs for future mining into that, the profit margin's not that great between this spot price here. I mean, it's probably only a couple bucks. Like $2 is all they got left to make any sort of profit. Okay? Now, you all guys all know that every business in the world out there, they work on a profit margin. Okay? Suddenly we got shipping costs going to come into that profit margin. Now, the shipping costs were marginal. They always used to be marginal. Suddenly, the shipping costs go through the roof with a heavy item like silver, and it might, just the shipping costs alone might cut into their profit margin by a considerable degree. You guys thought about that? Because shipping prices are going up so high, it almost reminds me of what happened in Texas during that energy crisis we had, you know. People in Texas always had their electrical bill, and all of a sudden, you know, they got this $30,000 bill, when normally their electrical bill was like $70. All of a sudden in the mail comes a $30,000 electrical bill. That's what the shipping thing's like right now. Well, it used to cost them like $200 to ship a load, whatever they need for a factory or something. Now all of a sudden they get a bill for $200,000 for the shipping. It's just gone nuts. Everything in the world's going nuts, but shipping is really going nuts. You guys know it's going nuts out there. So there's a lot of factors in here, but silver price is still staying down $22.54 today. It's down 14 cents. Oh, whoop-de-doo! You know? I mean, it's just gone unreal. How the price can stay down on this, one of the most precious assets needed in almost everything that they do. If they want a new big green thing, they want to put windmills in everywhere and everything. Well, I'm going to tell you what, there's silver components on those machines. They want a whole bunch of new solar. They want a new solar factory. They want to put in solar in every house or whatever. There's solar. Each one of those solar panels got silver inside it. Yet the price stays down where it's staying. I just get this feeling that one of these days, guys, this thing is just going to explode upwards. It's going to break free and it's going to explode upwards. And I'm thinking a very high possibility that might not just be the premiums either. It might be the spot price might explode to the upside. We might see days of $3. It goes up $3 in one day. Coming up. Or more. Okay. Let's take a look now at gold. See what gold's doing. Gold's at $17.52 today. It's down $17.10. I'll tell you, if you can still get gold and silver, what a great time to buy in, you know. Because, look, we might get a market crash, and we might see prices drop on things. But the thing is how long do you guys think that's going to last? If we do get it at all. Do you think that the central banks are just going to stand back there and say, oh, well, the market's crashed 10% today and it's expected to crash 10% tomorrow and the whole system's going to shut down and we're not going to do anything about it? No way, no way. They're going to print till the cows come home. And I tell you guys what I see coming next down the pike is central bank digital currencies. You know, the bigger central banks and everything, Chinese are already in there and they're working on it. And you can bet that these other central banks do not want to get left behind on this. China's getting the first mover advantage. But you can bet that they're sitting back and they're not saying a whole lot about it because they don't want a lot of flack. They're just going to bring it out when they bring it out. Boom, it's going to be right in your face. Central bank digital currency. And by gosh, they can sure pump the money out there. Because they can set up every single person with an account, and all they got to do is push a button to pump the money out then at that point. No fuss, no muss. Anyway, let's move on and take a look at the cryptocurrency prices today. 21.96. Cryptocurrency's doing real good. Bitcoin's broken through the $50,000 barrier. 50,187 right now at this moment. So cryptos are doing real good right now. But cryptos are very, very sensitive to moves in the market. Crypto, I see it's not, I wouldn't call it a direct tie to the markets, to the Dow and to the S&P 500 and stuff, and the Russell and all that. It's not a direct tie, but it's sort of there is a relationship there between cryptos. When the markets move down, cryptos tend to go bearish too. You know, the markets are going up like today. You know, cryptos is hot today. You know, what we're going to see with cryptos eventually down the road at some point after the inflation really pumps the cryptos up, and that's what's really going to do it is when the inflation really hits. This is a hedge against the dollar. And all the hedges against the dollar. Gold, silver, cryptos are all going to go up. When crypto gets high enough, we start to get a Bitcoin price that's well in excess of $100,000, then you're going to see more stability start to come in. In fact, we've already seen more stability than we used to see. I remember when Bitcoin could drop 50% in a day. We don't see those kinds of moves anymore, now that Bitcoin's up around $50,000. That was back more when Bitcoin was like $200. That's when we were seeing those big moves to the, you know, it could shed $100 in one day. It'd be $200 one day and $100 the next. And that was not uncommon. Well, that with the price we got for crypto right now at $50,000, that means tomorrow it could be $25,000. No, you don't see those kinds of moves anymore. You know, now we might see it drop to 45 would be a big move from where it is now at 50. If to drop to 45 tomorrow, that's a much smaller move. priced in percentage. Okay, let's take a look at the Dow Jones today, and we're looking at 396 points to the downside, 34,399. Oh, what did I say? Did I say to the downside, to the upside? 396 points to the upside. It said downside. 34,399 today, you know. So Dow's bouncing back. Got a lot of buy the dips out there still going on. Okay, I'll tell you guys what I think they're going to do, though, with this debt ceiling thing. I still think at the last minute they're going to come through with some sort of a forestallment of it. Maybe they'll just say, okay, we're just going to deal with it next year, sort of a thing, and put in some sort of legislation, or like they always do. I think they'll do that when push really hits shove, you know? But they sure are taking it to the last minute this year. And if they if they were to step over the line, maybe even by accident, we wouldn't see it coming because we'd all be out here thinking, hey, they'll do something at the last minute like they always do. If they do step over the line, it's going to take all of us by surprise. Because that's not really what the markets are expecting. And that means the markets haven't priced any of that in. You guys thought of that? Okay. Now we're going to take a look at crude oil at 78.95 today, and it's been slowly moving upwards. It's getting up almost up to 80 bucks now. I'll tell you guys what, I see it passing 80 and heading toward 90. That's what I see coming with crude oil. And you know, this puts pressure on gold and silver to pop and go up, you know. This crude oil price going higher and higher. Let's take one of the things suppressing the gold price. What we're going to come to right next. Let's take a look now at our move index at 60.61 today. Now we're going to take a look at U.S. Treasuries. Now this right here, these rising Treasury yields, are putting a little bit of downside pressure, and the rising dollar has been putting a little bit of downside pressure on the gold and silver price lately. But the oil price going up has been putting upside pressure on it, you know. We're looking at quite substantial rise in yields today, you know, 6.2 basis points on the U.S. 10-year at 1.53, and the U.S. 30-year is at 2.09, and it's up 4.9 basis points. This is, these Treasury yields are starting to get kind of high, and this is going to put downside pressure on the stock market today. So let's take a look now at the dollar index. And we're looking at 94 right across the board. And it's going up today, but only slowly. Now, okay, here comes the pets, guys. Hello, ladies and gentlemen. We're nearing the end of the pet list for this month. Okay, so we got a couple pictures here, and really cute. And this is Petey. And Petey's laying on the bed having a nap. But it's this second one of Petey that's going to really get you. I mean, he is really cute in the second one. He's laying here on the couch having a nap, and he's got both paws straight up in the air. It's the position that he's in, you know. I mean, it's just like, oh my goodness, he's with his both legs sticking straight out like that. And it looks like he's half asleep or maybe sleeping. Rarely you see a pet sleep like that, you know. It's awful cute. Anyway, we're going to move on to the next one here. And it says, hi, Glenn. My wife and I love your show. Felix is a 6-year-old border collie mix, while Lucy is a 7-year-old lab mix. They love to go hiking in the forest. And thanks for making finance fun. Tony and Jan. So here we go. We got the two pets. One is Felix, and he's a 6-year-old border collie mix, and the other is Lucy, a 7-year-old lab mix. Both very cute, very alert, and ready for action. Thank you guys for listening to my show, and remember, thumbs up, guys, and lots of comments, and we'll catch you guys in the very next show. Bye-bye.